Well, good morning, everyone, and welcome from beautiful downtown St. Louis, Missouri. It's hard to believe we're having another webinar on topics we started talking about back, gosh, it was back March or April. So thanks everybody for joining us today. When we started talking about this last year, I got to introduce it as a beautiful sunny day from St. Louis. Today's a little overcast, a little cloudy, but still a beautiful day nonetheless. So I know we've got folks joining from all over the Midwest and the country. So hope it's a beautiful day where you're at as well. So on behalf of myself, all of my partners, and our entire team here at Anders CPAs and Advisors, welcome to our webinar this morning to talk about what we really think is quite frankly, a really positive kind of light starting out 2021, and that is the stimulus bill that was officially signed on December 27th. So I wanted to introduce it that way because last time we talked back in November, there were some stumbling blocks to a new stimulus bill. We weren't sure how the year was going to kind of wrap itself up for individuals and businesses. And thankfully, we all got this nice kind of late holiday / Christmas present on December 27th. And I really do think that 2021 is going to be just a much better year for so many reasons. I think the stimulus bill is probably the kind of bridge funding and the bridge benefits that a lot of businesses and a lot of individuals need to really kind of get through, hopefully the next couple months, maybe the next quarter or two, as this, as the vaccine kind of rolls out throughout the country, and hopefully the spread kind of slows and we're able to open things back up. It really does seem for many businesses and many industries that there is going to be so much pent up demand that once things are open again, it's going to be a big year. I was actually talking at lunch with a few colleagues the other day, and they brought up a very interesting point that I think maybe could resonate this year, and that is our last, I hate using this word, but it is true, the last pandemic, I think it was 1918. It was a very tough time for our country, just like last year was a very tough time for our country. But there's kind of this anecdotal evidence that the pandemic of 1918 had all this pent up demand that really led to the roaring 20s. And I think we can read back through the history books that was a boom time for our country. So hopefully we have a very similar result, that in the next couple quarters, with the stimulus bill to help us through, it's going to be a much more positive year. And it's kind of probably cheeky to show this, but my sister is a very positive person too, and she bought me this new calendar this year. It starts with this right here, 2021. It's going to be an awesome year. So I hope that for everybody. So with that said, let's really get into the meat of the content today. So the new stimulus bill, December 27th. For those who've read anything about it, it was a monster. It started at about 6,000 pages, and I'll say that just because of really how incredibly proud I am of our stimulus and our COVID-19 team, because while a lot of folks were enjoying their holiday break, our team was spending countless hours during their break going through the stimulus bill to really learn it, to really understand it for you. So let's talk about real quick, Teresa, if you can advance the slide. One thing we do want to put, since there is started with 6,000 pages of material, we do kind of have to put a little disclaimer in there this time that our goal today is to present what we found to be potentially the most beneficial parts of the bill for business owners and for individuals, but there's certainly no way in an hour to cover all 6,000 pages. And there's certainly, even in those areas we want to talk about, not enough time to go into the kind of nitty-gritty detail we need to really give individualized business and advice. But that being said, we hope what we present to you today kind of is that thought-provoking commentary you need to ask questions of your advisor, whether it's one of our advisors or an advisor that you work with. But hopefully this gets the conversation going for you. So that disclaimer said, it's my pleasure to introduce to you our presenting panel today. For those that have been with us before, probably some familiar faces. For those of you that are joining us for the first time, thanks for joining us today. But you'll be hearing from a few of us today, my colleagues Paul, Dan, Chad, and Rebecca. And then behind the scenes, monitoring our live Q&A, we've really just got such a great team here at the firm behind everything COVID-19, and part of that team is represented here for our Q&A panel. So the disclaimer we used last time, and it really worked well. If you have a question that is kind of has some broad appeal or some broad benefit for the full audience, please pose that in the Q&A. If you have something very specific for your individual business or your individual situation, you can certainly put that to the Q&A, but you'll likely get a follow-up from us that will one of our advisors will follow up with you after the presentation. We're trying to keep the Q&A hopefully to be good broad topics for everybody involved, and if there's very specific things, we'll definitely follow up with you on that. So real quick rundown of our agenda, and we're going to just get right into it. So part of the bill is the PPP program, and that's probably one of the things we've talked about the most the past 9 months. But if you really start to uncover some of the layers in this bill, there's a lot of other benefits, some pretty huge benefits, particularly for businesses around the payroll credit side that we're going to spend a lot of time talking about, because that's an area that, in addition to PPP, we found is going to be pretty hugely beneficial for folks. So we'll follow this agenda. If there's something that you're wanting to hear, you hopefully kind of know where it's going to fall. So if you have a question on tax credits, you know it's going to come. You don't necessarily have to drop that in the Q&A. And then we've shown this in every single one of our webinars, and we're gonna show it here before we get into our first question. But that is our roadmap, kind of the roadmap of COVID-19 relief efforts. Starting at the very top, March 27th. Was when the CARES Act, the original stimulus bill, was put into place. And as you can see, since then, kind of as the roadmap winds its way around, there's been a lot of different dates put out. It's been a very kind of iterative process. This is our first time in a whole long time as a country going through something like this. And there's really been a lot of back and forth from a lot of agencies. The SBA has been at the front of this, and have just there's just been a lot of back and forth with the SBA, the IRS, and when we're in the middle of it, there were some frustrations. But I think as we look back, we had a lot of great guidance from the SBA, from the IRS to really help us through this. And now through PPP round 2, or kind of second draw PPP, as you'll learn, we're going to be much more poised for faster results because of what we've learned along the way. And the only thing we'll add on this map, you can see the map changed a lot. December 27th was the last update when we updated this yesterday. And then even yesterday evening, 2 new what are called IFRs came out that will add to this map. So that's how quickly this can change. So let's get into our first content area, and that is individual stimulus payments. We're not going to spend a ton of time on this because it's mostly business owners on this webinar, but stimulus payments are just an incredibly important part of this bill, and they were an incredibly part of the past bill. So we want you to be aware of this. Some folks might qualify, some might not, depending on income limits. This might be very beneficial if you're a business owner and you don't qualify for your employees. So just something to make folks aware about. So our colleague Rebecca has been at the forefront of the stimulus package, and if you're in St. Louis, you've probably seen her on KSTK a few times. She speaks to the local news stations about this. So Rebecca, I'm going to hand it over to you if you can tell us a little bit about individual stimulus payments as part of the new bill.
Thanks, Dave. And I think you said it. I'm sorry if I'm getting some feedback. I think you said it exactly right. This is at the forefront of everybody's mind. Of course, there's a lot of great business information in this package that we're going to talk about today. But first and foremost, cash in the door. I, as an individual, what does this look like for me? So if we go to the next slide, we'll see exactly what this looks like for me. So we've got our stimulus payments this round are $600 per individual. If you are a married couple filing a joint return, then you can expect that to be $1,200. And there's going to be an additional $600 for each qualifying child. So this is a little bit different from what it has been in what it was previously, the first round of stimulus payments back in the spring and summer. Qualifying child is much more specific than what we had before as dependents. So a qualifying child means that they are a child, they're under 17, and they're claimed on your tax return. You may know that, we can have dependents that are over 17 that are claimed on our tax return, but we don't get to include those for the sake of stimulus payments for this round. So these payments are again based on our 2019 tax returns, which seems so far away, but don't fret. anything that from the first round of stimulus payments or from this new round of stimulus payments is going to be adjusted on our 2020 recovery credit. So when we file our 2020 tax returns here in the next 3 or 4 months, we'll be able to use our facts and circumstances to show what our stimulus payments should have been and what we got, and then any differential. So backing up a couple points on the slide real quick. So there is a phase out, like Dave mentioned, based on adjusted gross income. This is the same limitations that we had the first time around. For this round of stimulus payments, valid identification numbers are required. This is again a little bit more particular than it was for the first round. So we need social security numbers, or in the case of a child that's being fostered or adopted, we need the adoption care information. And then, like I said, all this is going to be reconciled on our 2020 tax returns. So this means maybe I filed my 2019 tax return and it feels so long ago, and I've moved twice since then, or my bank account isn't the same, then we need to use this link here at the bottom. We need to go out to irs.gov and specifically make sure we're going out to the IRS website. There are plenty of spams out there, but we need to go out to the IRS website. And then if we go to Get My Payment, we can enter our current information out there. So that way we can enter our direct deposit banking information or our new address information, so that the IRS has the most up-to-date that they can send us, either the stimulus check through direct deposit or through the mail. And then they'll have our information to do that. So without any further ado, I'll send it right back to Dave and we'll talk more about some business impacts.
Thank you very much, Rebecca. And as Rebecca alluded to, some folks on this webinar may or may not qualify for a stimulus payment, but we do believe a lot of folks that you might work with would apply. So definitely something to let your employees know about if they haven't already. So one of the things that was in the CARES Act that we talked about a little bit during the year, but not as much because the PPP program was really at the forefront. There are a lot of tax relief provisions in the CARES Act, and now as part of the stimulus bill. And now that we're at tax time, we do want to talk about these, because there's a lot of ways within tax planning and these tax provisions to increase cash flow to your business and increase cash flow to you individually. So whether we get there through a loan or through tax relief, it's important to talk about all the ways we can enhance your cash flow this year. So for that, I'm going to turn it over to our colleague Chad, who's really been at the forefront of all the tax provisions in the stimulus bill and the CARES Act. So Chad, can you walk us through some of those key provisions that you've been keeping an eye on?
Yes, thanks, Dave. Yeah, there's many tax provisions in both the CARES Act and now the new bill. So I kind of just want to highlight a few of them here, both on the individual and the business side. If you go to the next slide, there's been a couple related to charitable contributions. The CARES Act allowed for taxpayers a $300 above the line deduction. It's not a big number, but for those taxpayers who cannot itemize and just use the standard deduction. When the IRS issued their draft 1040 instructions, they interpreted the rule. It was whether you filed single or married filing jointly, you'd qualify for the $300. This act, Congress extended the deduction for both 20 and 21, and it's now $600 for joint filers or $300 for other filers. The second bullet point there is in the CARES Act, they got away with the percentage, 60% of your AGI phase out for qualified charitable contributions that apply to charities. Basically, you can deduct up to 100% of your AGI for those that are very charitably inclined. So this is kind of both helps out for individuals and try to help to get some money to charities with the pandemic. If we go to the next slide, there's a couple provisions related to education. There's a small educator deduction, above the line deduction. They're going to include personal protection equipment in this for this now for 2020 to allow those expenses to be deducted. And then as part of the extenders, they repealed the deduction for qualified tuition, but the lifetime learning credit phase out levels increased to equal those that apply to the American Opportunity Credit. If we move to next slide, there's a medical expense deduction extension. This was scheduled to increase in 2020. They made permanent the 7.5% AGI floor for individuals that can deduct medical expenses as itemized deductions. And then this was kind of a big one for flexible spending accounts for those that had, a lot of money left in their dependent care benefit flexible spending account at the end of the year due to daycares being shut down. They're allowing this carryover of unused benefits up to the full annual amount from 20 to 21 and 21 to 22, or they're going to permit a 12-month grace period. So employers are just going to have to update their plans for this, but this will give an opportunity for you to use those funds and not lose out on those. One area we did not address was retirement plans. The provisions put in place by the CARES Act didn't really change. They didn't really use retirement accounts as a source of continued COVID-19 relief in this act. It was more, they did some changes, mostly focusing on allowing more flexibility in future as it relates to potential qualified disasters. Now I'd like to move to the next slide, which is going to kind of cover some of the business tax provisions. The first one here, I think, is kind of important for both business and the restaurant industry. In an effort to help the dining industry, they are increasing it from the 50% meals and entertainment deduction up to, you get the 100% full deduction for 21 and 2022. And the provision is the deduction has to occur if the food and beverage is provided by a restaurant. So I think that's going to be important for businesses. There's a retroactive change for depreciation on certain residential rental property. I'm not going to go into a great deal of this, but the Tax Cuts and Jobs Act in 2017 shortened the depreciation life for certain residential holdings. This goes back in saying if you held the residential property before January 1st, 18, you can go back and get this 30-year cost recovery instead of 40 years, so it shortens the depreciation life if you hold that type of property. The next slide is an extension as well. The Section 179D was going to sunset, but if you have energy efficient commercial building deduction, there's a list there that you can claim a deduction for energy efficient improvements. So this has now been made permanent, and you can see some of the numbers there on the screen. And then finally, I think the biggest business tax provision, I think, with this being signed right after Christmas, was the next slide, is that all your PPP loan is now not taxable. Originally, this was not the intent of Congress when they passed the CARES Act, but then the IRS took the position that if you got loan forgiveness on your PPP funds, you'd have to pay tax on those. So a C Corp that had a $500,000 PPP loan, at the 21% tax rate, they'd have a $105,000 tax bill due on that. So now with signing this tax bill, that went away. So it really helped us as tax planners at the end of the year getting some clarity on this, and really helped put more money in business pockets. The next slide kind of gives you a little chart of what would be taxable on your federal return versus what wouldn't be based on various grants, the EIDL loans, PPP loans, just something that you can maybe reference going forward. So with that, I think I'm going to hand it back to Dave to continue the PPP loans.
All right, well, thank you, Chad. And as I alluded to, and as Chad really just walked through so well, anything we can do to put cash back in your pocket or put cash back in your business, whether it's a loan or whether it's tax savings, it's very critical. And as I opened up, we're trying to come up with every way possible to really use this stimulus bill as a bridge to get folks through, hopefully the next couple months as things get better for us, to really be poised for that kind of roaring 20s growth later this year. So we're going to move on to the PPP portion of the program this morning. We talked about PPP ad nauseum last year, but it is just such a critical program to help businesses and really help flow money from businesses to employees. The number of folks that we've worked with this past year or past 9 months that have said that this was really the lifeline that they needed to keep the doors open and keep the lights on. I mean, it's just an incredible list. So we know it's a very important program. It's very critical. There's PPP Draw 1 updates we're going to talk about first, and then we're going to talk the new draw, the PPP Draw 2. So to talk PPP, I love giving kudos to our former banker colleague Paul. when Paul joined our firm several years ago to do a lot of bank consulting, we never knew how lucky we would be then, and especially now. I mean, having Paul on our team to just know this PPP program inside and out and have such great connections within the SBA has just been huge for our firm and really beneficial for our clients. So, Paul, I'm going to hand it over to you to talk about PPP Draw 1, or what we're calling a PPP 1. So, Paul, please walk us through.
Well, Dave, we're actually going to turn this one over to Mr. Schindler at this point.
Yeah, so yeah, I'm going to take a stab here at the PPP round 1 changes. Thanks, Dave. It's I know we can get synonymous with me and Paul as we do our PPP with Paul and Dan. It's easy to get us mixed up at times. But the Economic Aid Act enhanced and extended the original PPP program in addition to authorizing a second draw PPP program. So I'll touch base on a couple quick changes or enhancements of PPP 1 before turning it over to my colleague Paul to discuss the second draw program. So the original or first draw PPP loans were previously barred after August 8th of 2020. The Economic Aid Act actually extended this program, as well as the second draw program, to March 31st of 2021. The first draw loans have many similar aspects as before, but quite a few significant changes do apply. So as a brief recap, the original PPP criteria were that you had to have 500 or fewer employees. The maximum loan was capped at $10 million. So those still apply. A couple quick changes that apply to both first draw programs and second draw programs are no public companies can get a PPP loan. The new guidance opened up PPP loans to certain 501c6 organizations. So some nonprofits that were previously not eligible are now eligible. The guidance also updated or allowed for borrowers who initially returned their PPP funds and they meet the criteria still or now, they can go back and get a PPP loan, original PPP loan, up to the maximum amount, up to the $10 million or whatever their maximum is based on their payroll costs. Then if a recipient did not receive the full amount they were entitled to in their first PPP loan, that recipient may request a modification to increase the covered loan amount to the maximum amount applicable. So if we want to go to the next slide here, touch base on a few changes in forgiveness. After some of the big changes in the PPP loan program are retroactive to PPP loans currently outstanding, in addition to new PPP loans not yet received. First, Paul will allude to this in a little bit more detail, but existing PPP loans, or original PPP 1 loans as we'll call them, have new eligible expenses. The new eligible expenses that apply are called covered operational expenditures, covered property damage costs, covered supplier costs, and covered worker protection equipment. Like I said, Paul will go into a little bit more detail on those, but these new eligible expenses apply to loans that have not yet been, you have not yet applied for forgiveness. So original PPP 1 loans, as well as second draw loans going forward. Borrowers who have not yet applied for forgiveness can also now choose a flexible covered period that starts on the date the funds are received and ends on a date at on the date that the borrower chooses, that is after 8 weeks and less than 24 weeks from the start of your covered period. So there's a lot of flexibility here that the borrowers have in terms of picking a covered period that is most applicable to them. And if they have to adjust their employment figures, if they have to furlough or lay off anyone, say after 12 weeks, they won't necessarily be impacted if they just want to choose a 12-week covered period, as opposed to previously having to choose a full 8-week covered period or a full 24-week covered period. So with these changes, some banks and many banks are in a holding pattern with their portals. Some are proceeding, moving forward, but from what we see, only to the extent that you are using the previous rules in its entirety. So if you're going to be using a flexible covered period, I suspect banks may not be accepting applications for those just yet, as they wait for further guidance from the SBA or Treasury with revised applications. The new part of the new guidance also allows for PPP loans, previous PPP loans that were $150,000 or less will have a new forgiveness process. It'll be a one-page certification document that you provide documentation as it relates to your PPP loan amount and your estimated jobs retained and the estimated amount you spent on payroll costs during your covered period. So if you have a PPP loan of $150,000 or less that is not yet applied for forgiveness, I would probably pump the brakes and wait for future guidance that allows just this one-page certification rather than going through the process of gathering some additional documentation to provide under the old rules. You still do need to keep the appropriate records, but you won't necessarily need to submit anything other than this one-page certification. So with that, I will turn it back to Dave and ultimately Paul as it relates to the second draw PPP loan program.
Well, thank you, Dan, and thank you, Dan, not Paul. I apologize for that. As our roadmap at the beginning of the webinar showed, there's lots of twists and turns. So as we've navigated the program, we've had a number of folks involved. I will put in a plug right now for those that have not watched their videos yet, but both Dan and Paul on a almost sometimes daily basis the past couple months have been doing kind of mini little series. It's PPP with Paul and Dan. So if you've not seen those on our website and want to get kind of quick snippets about the PPP program, I definitely invite you to go to our website to see those. And with that, Paul, I'm going to turn it over to you to talk about the kind of the new PPP2, as folks are calling it, which is really the second draw PPP program. But if you can kind of talk folks through that and kind of what benefits might be out there for businesses the second time through.
Sure. Thanks, Dave. I think when I go back and revisit the first webinar that we did, other than the fact that I have a whole lot less hair, or that maybe is debatable, and I think someone reminded me that I'm probably wearing the same shirt, some of the comments that we made early on really apply today. We have great banking partners that have great support from the SBA, but we were all very uncertain. You as business owners were uncertain. We as advisors were uncertain. No one knew exactly where this was going to go. So there's been a lot of changes, but I think we've seen the changes from a positive perspective as it's moved through this process a little bit. When we take a look at all of the guidance that comes out, we try to follow every inch of this, but it becomes very difficult. And I think more and more, as things sort of repeat themselves, some of the things get easier, but we're going to obviously wait and make sure that we get total information before we supply everything. So why don't we take a look at the next slide and talk about the eligibility of this particular program. I think we all anticipated this for quite some time, but obviously now it's at the forefront, has been approved. So businesses are eligible that have experienced a 25% or more reduction of gross receipts in any calendar quarter as compared to that same calendar quarter of 2019. Now the new IFR includes additionally that for simplicity purposes, if you do more of just an annual reporting, if you're a very small business, then you can look at the annual piece of that as well, instead of having to go back and find that particular quarter for 25%. So reporting on both of those when you get ready to apply is certainly appropriate. So if you weren't in business in 2019, or you opened in 2020 prior to February 15th, and you remember that magical date, there are three new ways to take a look at this. If you opened up in the first quarter of 2020 before February 15th, then you're going to get a comparison period of the second, third, or fourth quarter of 2020 to compare your reduction to. If you opened in the fourth quarter of 2019, your comparison period is going to be the fourth quarter of 2019. If you opened up in the third quarter of 2019, then your comparison period is going to be the third or the fourth quarter of 2019. So it creates a unique opportunity here to look at different periods if it just isn't as clear as that calendar quarter. 300 employees or less, As we mentioned in an early slide, publicly traded companies are no longer included in this program. And if you did receive a first draw, since this is the second draw, you will need to have used all of your money for the covered expenses before you can receive the second draw proceeds. And you may have already done that. In most instances, businesses have. It did create some additional expansion, and there's a larger list. We're hitting a couple here: sports venues, entertainment venues. So there's plenty more additional out there. But one of the things that's important to know is that if more than 20% of your company is owned by or has any significant operations, any board affiliations with the People's Republic of China, then you're not going to be eligible for this loan. So those are the basic fundamentals of the eligibility. There are more details that are published out there. You certainly watch our website as we get more information from that perspective, but these are the high levels. So next slide, please. So big question is, what can I spend it on? And I think we all remember the payroll costs, the rent, mortgage, interest, utilities, all those usual suspect. But you know, they've included several more categories, and the first is a pretty broad category. So we're going to, obviously, we got a little more detail here. I won't go into every bullet point, but we're going to publish these and send the slides to everybody on the call here, so you can sort of dig into this. But covered operational expenditures, and really it seems like there's much more that you can do now, and certainly not very much that you can't use. But one clearly that's big for companies right now: software or cloud computing expenses. You know, as businesses move forward, it's important for them to realize that, you know, the SBA and the Treasury and everyone else wanted companies to thrive. You know, they knew they were in trouble, but if it's a good company that's going to continue to thrive, that needed a little help, these types of expenditures will let you increase your ability to move forward. Product and service delivery systems. We talk about payment processing, tracking of payroll expenses, things that are near and dear to our heart, you know, accounting, tracking of supplies and inventories, a lot of things from an operational perspective that you'll be now able to use as a covered expense. So covered property damage costs. This one seemed to be a little unusual, and now I think we kind of understand a little more. But costs related to any property damage or vandalism or looting that was due to public disturbances that occurred during 2020, you literally, if it wasn't covered by insurance, you can use those costs as a covered cost. Next slide, please. Covered supplier costs, another pretty broad category. Expenditures made by an entity for supply of goods that are essential to your operations. So really anything that will help you move forward with the supply chain that keeps that moving along well, you know, that's going to be an eligible cost for you as well. The covered worker protection expenditures, you know, this is a big one as well, that a lot of our companies spent a lot of money, and it felt like that they couldn't quite use that as a covered expense, and there were some questions early on, but I think this clarifies it completely. You can use that, and certainly that will help you recoup some of those costs when you're trying to apply for forgiveness. And we'll kind of hit this one again. These are retroactive to PPP-1 loans that have not yet been applied for. I know there is some differences of opinion right now, but we've talked to several banks that have been in communication with the SBA, and it appears that retroactivity is out there. The last point I wanted to make that's not on this slide is that we're going to be covering an ERTC, which is the Employee Retention Tax Credit, a little later on down the road. And obviously, these new expenditures will give you an opportunity to really balance between payroll and other expenditures. You're still required to pay 60% to cover your payroll costs, but that 40%, you want to balance that and make sure, because it may be important to include some of these as you move forward from a tax perspective. So how long do I have to spend it? Well, you know, the borrowers could originally choose either that 8-week or 24-week period. Actually, it really started with just an 8-week period, and in June they gave you the option of the 2. So that made it much easier to be able to spend, you know, all of those expenditures on employees more. And, obviously now we want to make sure you're looking at everything as a strategy from beginning to end. And the covered period then begins, obviously, if you always remember the date of the loan proceeds that you received as a borrower, that's when this covered period begins. But there was a new twist. Now you can choose your own ending point. So let's say you're looking at maybe 15 weeks and you've spent all your money and you've done everything you need, and at this point it's best to apply for forgiveness. You can choose that and move forward. So it gives you a lot more flexibility. One of the things I want to sort of move back, and we don't need to change the slide, but when we talk about a 25% reduction, we're talking about gross receipts, and there are a couple of things in there, such as discounts, charge-offs, things like that will be included from that perspective. But it is the top line receipts. You're not looking at any sort of net income. It is the gross sales or receipts of the company. So I want to make sure that we drive that point home, and there will be more clarification as we move forward. Next slide. So how much can I apply for? This is always the big one. How much can I get? Things stayed the same for most companies. You're going to get 2.5 times your average monthly payroll. You can base that on the 2019 calendar year, or you can base it on a 12-month period that's immediately prior to submitting your application. You can also base that on 2020 if for some reason that will give you a better number. But typically most people are going to use that 2019 number. And the benefit to that is that in the IFR that came out on Tuesday evening, if you submitted that paperwork to the bank, then that paperwork, the bank still should have that. Now, I think every bank will develop their own processes, but it's clear the SBA put in that IFR that if you submitted that information already, that same information can be used, and that will save you a ton of effort in applying for the loan. So that gives us a clue as to what we think our banks are going to do and how quickly they can move forward in a process once it becomes appropriate to open their payrolls or begin, their portals or begin accepting applications. So next in line, I'm going to slip down and talk about 3.5 times. What's that new number? Well, they're going to give a little more to some of these businesses that were harder hit. And all the bankers out there will know what I'm talking about when we talk about an NAICS code, but it's a business code. And these are primarily for hospitality businesses, restaurants. They're going to get 3.5 times their average monthly payroll. So this is a big boost for all of those businesses that took more of a hit. And last but not least, there was a comment early on about seasonal companies, but there really wasn't a focus of what that seasonal company meant. So we've included this in the slide. The SBA has defined what that seasonal company is, and it really just states that if you've not been in operation for more than 7 months during a calendar year, or a certain percentage of your gross receipts over a 6-month period of that year. So apply that test to you if you think you're a seasonal company, and you can use that as well. Next slide, please.
Well, thanks, thanks, Paul, for the very thorough rundown on our PPP2, or really technically the second draw PPP. We've seen a lot of questions coming up in the chat just about what's included in gross receipts and how we do that test. So keep those questions coming. If we're not able to get that question answered for you specific to your business in the chat, we will definitely follow up with you and kind of let you know what that might look like. So I'm going to give Paul just like 2 seconds here to grab a glass of water, maybe change out of his one banker blue shirt and put another banker blue shirt on, and transition to some other small business funding sources. So again, the topic of today isn't specific to any one cash flow enhancements. It's all the different cash flow enhancements for your business that are available. So Paul, now that you've had a chance to take a swig of water, I'm going to hand it right back to you, since you're our resident banking expert, to talk about a few of the other loan program and funding programs that are out there. So Paul, please take it again.
Okay, well, thanks, Dave, and let's kind of move the slide forward if you would. to the additional small business funding programs. And, this is one it's just sort of loose as to what's out there. It's, there's things that are going to change with the CARES Act. There's going to be more available potentially in grants, but these are things we sort of know right now. The EIDL, which is the Economic Injury Disaster Loan Program, it received a significant amount of additional funding. So the SBA indicated recently that new portal will be available on January 17th. So for those folks that didn't apply, you have the opportunity to do that. These are loans. They're not forgivable loans, but they are loans that will help you from the sort of the emergency funding for your company moving forward. They're very long term, so payments are relatively inexpensive. The thing you need to understand about the EIDL program is that there was some stoppage and startage of fundings and ability to apply, and that at this point appears to have all been corrected, and folks will be able to do that as early as January 17th. What about the grants? We heard a lot of things about the grants. There were originally $10,000 grants, and then the funding started to shrink, and they moved it down to potentially $1,000 per employee on smaller companies. And so it's kind of all over the board with the grants, but the grants are back. There's plenty of funding for that. They won't be deducted from your PPP forgiveness amount, which is good news, because originally that was happening, and they're not taxable income. The one thing we need to think about the grants, though, is that some of you didn't get the grants, or you got a portion of the grant, and how am I going to get that back, or what do I do? Well, the SBA is certainly working through a program to deal with how those grants will be. Are they going to be automatic? There's some certainly question around that, or for folks that applied and didn't get them. Our thought process is that they will have that information prior to January 17th as to what really needs to be done. If you've already got your PPP loan forgiven and that grant was deducted out of that, and there's a $10,000 loan sitting out there with the bank, the SBA and the banks will work together in making sure that's extinguished as well. But those are things that will need to be taken care of in the future. So there is also a significant number of programs that are targeted for low-income community businesses with losses of 30% or greater. So there's plenty enough room in this program, at least to cover those. But one thing I want to make sure that we don't forget is, the SBA and banks are in business still to do regular conventional lending or current SBA lending. They've gotten pretty good at the PPP loans and will continue to do that. But if you're a company that can still qualify for conventional lending, continue to have those conversations with your bankers. There are current SBA 7A programs out there. There are 504 loans, which are real estate based from the SBA perspective. So have those conversations with your bankers, because in many instances, they would love to do conventional lending for you as well. We've had a lot of questions about other Treasury programs. If you remember from our other webinars, we talked about the Main Street Lending Program, and that was a program that really didn't take off well. It served some needs, but some of the ability to qualify became difficult. So it sort of ran out. It's still open legally in the sense that the new administration and the Treasury will be able to look at programs in the future that will compete and probably take the place of the Main Street Lending Program, as it's somewhat idle right now. So just continue to listen to your advisors, gain as much information as you can, and we'll bring more information as a new administration and a new Treasury director sort of shepherd in some of these additional programs that we know they're going to have. So make sure you're taking advantage, conversations with your advisors and your bankers. And we think, as Dave mentioned at the very beginning, that there will be plenty of funding for businesses as we move forward when they start to right size and get better. Your banks are going to be your best friend in 2021.
Paul, I think you're 100% correct there. Not that bankers haven't been the small business owners' best friends for many years prior to the pandemic, but I think right now your banker, if he's not the person you're texting with the most to get the most information, probably ought to be. So thanks, Paul, for the rundown on all things PPP round 2. Dan, thanks for the PPP round 1. Now we're going to switch back to tax, but we broke this last section out specifically because this is a section that's going to talk about some payroll tax credits. And under the first stimulus bill, under the CARES Act, these were they quite frankly just weren't that valuable for businesses due to a fair amount of limitations. Under the new stimulus bill, some of these payroll tax credits are actually, we're finding out to be incredibly valuable for businesses. So that's why we wanted to break this out into its own standalone section to hopefully, kind of as we get to the end of the hour here, draw your attention back in, because this is an area that we think, depending on how rough a year 20 was or how rough 21 is, there could be some significant cash flow savings and cash flow benefits to folks here. So Rebecca, I'm going to turn it back over to you since this is the area you've been following the closest. So Rebecca, can you talk us through some of these payroll tax benefits?
Thanks, Dave. So absolutely. If we go to the next slide, like Dave alluded to, we are going to focus a little bit on the employee retention tax credit. So with the new legislation, the employee retention tax credit went from, it was interesting. It was great for those that it applied to, but it was really limited. And now with the new legislation, we have a lot more businesses that will be eligible to use it, and it can be a huge advantage from a cash perspective and just something that we can take out of this new act. So the first bullet point on this page is it's a retroactive change. So previously with the ERTC, we could not take advantage of the ERTC if we had a PPP loan. So for many businesses, we were eligible for the PPP. We got the PPP cash. That's what's helped sustain us. We didn't look twice at the ERTC. But now that it's out in, now that we have this change, whether we received a PPP loan previously or we will in the future, we can take advantage of this ERTC. So then our next couple points there are that we need to optimize between the two. So the catch, if you will, is that we cannot use the same payroll costs for both this tax credit and the PPP. So how that plays into effect is, some of what Dan and Paul were talking about earlier. For our PPP, we've got the way that we can use our expenses with those PPP funds. We have to spend 60% on payroll. For a lot of companies, we probably use more than 60%, especially since we could use up to 24 weeks of payroll. But now that we have the opportunity to look at the ERTC, maybe we want to use closer to 60% of our PPP on payroll forgiveness. So digging into a little bit more of the details on the ERTC, we can look at the tax credit for 2020 is eligible that we can take a 50% credit on wages up to $10,000 per employee. So we can make this election, take this credit on our fourth quarter payroll form 941, or we can amend second quarter or third quarter form 941 to take advantage of this 50% credit. So this is, so if we run through this example real quick, we've got a business with 30 employees and we've got a potential tax credit. So if we take 30 employees, if they were paid at least $10,000 during the time period that I'll mention here again in a second, but if they're paid $10,000 during this time frame, that's $300,000, and then our 50% credit is half of the $300,000. So this is a potential tax credit of up to $150,000, which is a large dollar amount if we weren't considering this before. So for 2021, this tax credit we can look at first and second quarter, so January through the end of June of 2021, and this is going to be a 70% tax credit, so a greater bump, and it's wages up to $10,000 per employee per quarter. So for 2020, it's across the full time frame, and for 2021, it's first quarter and second quarter separately. So if the employee was paid at least $20,000 through June, then we can take $20,000 for that employee. So if we get to our example with 30 employees, if all of those 30 employees were paid at least $20,000 through the end of second quarter of 2021, see if I can do the math here, 30 times 20,000, 600,000 times 70%, that's a $420,000 potential credit that we can get. So if we go to the next page, we're going to look at the next slide, we can look at our eligibility requirements. So maybe take a screenshot of this so we can reference it a little bit more, but my colleague Zach McDowell worked really hard on putting this together, and it's really helpful. It's not everything, this is just the highlights, but we're going to run through this real quick. So if this is for the 2020 credit. So if we start at the very top, we're average monthly 2019 full-time employees greater than 100. So for a business for an employer to be eligible for the ERTC for 2020, they have to have had 100 or fewer employees. And then we can kind of go either way on this. Were employees who were not working or performing services on the right, were they paid? If the answer is yes, and we have more than 100 employees, then we can still take advantage of the credit. If we have 100 or fewer employees, then we can take advantage of the credit. Then the second kind of rule here that we have to fall in line with was there more than a 50% drop in gross receipts for a quarter in 2020 compared to the same quarter in 2019. So this would be comparing second quarter of 2020 to second quarter of 2019, etc. If our gross receipts didn't drop by 50%, then was the business fully or partially suspended by governmental authority? If the answer is yes, then we're also eligible for the credit. So that time period that I was talking about on the very bottom left of this screen, we've got an eligible time period for the 2020 credit. This is going into effect basically when the pandemic started. So this payroll will have to have been paid between March 13 of 2020 and December 31 of 2020. So, and then the last bullet point on there on the very bottom left is to receive the credit, like I mentioned before, we can either put all of this on our fourth quarter federal form 941, or we can go back and amend our second and third quarters for 2020. If we go to the next slide, we'll look at our eligibility for the 2021 credit. So here we're going to start at the very top. Did I have 500 or fewer employees? So this is a larger bucket that many more of us can fall into. And then the arrows here are kind of the same until we get to the second step, which is, was there more than a 20% drop in gross receipts for, and we can look at first or second quarter of 2021 compared to that same quarter in 2019. So if we had a 20% drop and we have under 500 employees, then we are looking to be eligible for this credit. And similar to the 2020 credit, we will be looking forward. We will be filing for this credit on the federal payroll form 941 for first and second quarter of 2021. So that was a lot of words for me. That was a lot to get through. So I'm going to invite Dan Schindler. So clearly this has a lot of impact in a lot of industries, but especially for the restaurant and hospitality industry, which is where Dan specializes. So I want to bring him back and have him add any thoughts or any specific examples that he's seen how this could be a benefit to a business.
Yeah, thanks, Rebecca. If you want to go to the next slide here. As Rebecca said, or has alluded to, this employee retention tax credit is really one of the biggest, if not the biggest benefit out there, even including the PPP loan for eligible businesses. So those businesses that took a 50% decline in revenue in any quarter in 2020 or a 20% or more revenue decline in 2021, you need to look at this employee retention tax credit. Those industries that come to mind most are the restaurant and the hospitality and the retail industry. That's not the only industries that will be certainly eligible for this. So if you had revenue reductions that meet these requirements, you'd be missing out on some serious dollars if you did not take advantage of the employee retention tax credit. Huge advocate for these changes, but there's also some, as Rebecca alluded to, there's some strategy now for those that have not applied for PPP loan forgiveness. We have this 60-40 split. We have to use 60% on payroll cost. If we have not applied for forgiveness, we may want to consider utilizing all the way up to 40% for PPP loan forgiveness on the non-payroll costs. That will allow for more wages to be eligible for the employee retention tax credit. As you can see with this example here, a business that, they otherwise meet the requirements. They have a 50% decline in revenue in 2020 in a certain calendar quarter. That makes them eligible for the employee retention credit. If that business has 30 employees, they could have a potential tax credit of up to $150,000. And if there were enough qualifying wages, that could be in addition to your full PPP loan. Take it to 2021. If you meet the revenue reduction requirements, 20% or more reduction in the first or second quarter of 2021, and you meet the maximum qualifying wages, you can get a 70% credit, up to $10,000 in wages per employee per quarter. A business with just 30 employees can receive a tax credit up to $420,000. These are real dollars. These are dollars over and above a PPP loan that could get fully forgiven as well. The ducks have to fall in a row in order to get these maximum benefits, but there are a lot of businesses that will be eligible for the maximum benefits. And I really want to stress and make sure people are aware of this the employee retention tax credit rule changes, so that they take advantage of these if they meet these the eligibility rules. So I'll turn it back to you, Rebecca, to touch on a couple other payroll tax provisions or tax credits that are eligible for some businesses.
Thanks, Dan. And I definitely hope everybody takes away from this that, this is the highlights of the ERTC, and we would be happy to talk with anybody in more detail off the call. So I've got 2 more points to get through, and I'll get through them really quickly. So we've got the FFCRA tax credit. So this has been in effect this whole time. The new legislation extended this through March 31st, 2021. So this is if an employee is out on paid sick leave, then we can expect a credit for 100% of their regular pay for a maximum of $511 per day for 10 days. Or if an employee is out on paid family leave, we can expect a credit for 2/3 of their regular pay up to a maximum of $200 per day for 10 weeks. And then on the next slide, we've got our deferral of employer payroll taxes. So again, this is what we've had this whole year with the deposit timeline, that 50% of the deferred amount will be due December 31st, 2021, and then the remainder will be due December 31st, 2022. And this can be used alongside the FFCRA and the employee retention tax credit. So that's all I have for today. I'll give it back to you, Dave, and thanks for the opportunity.
Well, thank you, Rebecca, for kind of winding out the show this morning. It's funny, Dan Schindler, I'll tell you, if there's something that guy's more excited about than Mizzou Tigers football and oversized earbuds, it's that payroll tax credit. So I think his enthusiasm, though, really does speak to just how powerful we think that new benefit will be to companies. So the flow charts that Rebecca showed, those will be published in our COVID-19 Resource Center probably here in the next couple of days. So those will be out there for you. And you can always talk to one of your advisors to see if you would qualify. So we're about at our time. Where do we go from here? So I think where we go from here is now we have a lot of options, or a lot more options, for that kind of last hopeful bridge funding for your company. We've got PPP Draw 1 if you've not already applied for that. We've got PPP Draw 2. If you did the PPP 1, now you can potentially get PPP Draw 2. We've got a lot of tax savings out there for you. We've got payroll tax benefits out there for you. And then, as Paul mentioned, there's other funding mechanisms. So hopefully the message today is, we've got a lot of options now to hopefully bridge the gap to get us through to kind of greener pastures and bigger things here in 2021. So we always like to leave time at the end for questions. Unfortunately, we don't have that just because there was so much material. Thank you, though, very much for all the live Q&A questions. We've been trying to keep up with those. If we didn't get back to you, we'll do our very best to get back to you after the presentation. But please do. We're going to share our contact information here. If there's follow-up questions, we are definitely happy to entertain all those for you. So contact information for the presenters, for the Q&A panel. So please feel free to follow up with us. And the last slide we'll leave you with here, our team, which I mentioned at the beginning of the presentation, that we're just so incredibly proud of, just all the just phenomenal work they've done for business owners and for individuals. But all of their hard work is residing in our COVID-19 Resource Center, and that's live at any time. So feel free to go out there. We'll have our recorded webinar out there probably in a few days. We've got a lot of other resources, so please do take advantage of all their hard work at the COVID-19 Resource Center. And then, of course, we've built out teams to service companies with all types of recovery efforts, so you can learn about our recovery efforts as well on our website. And with that, we're right at time. We sure hope you gleaned some valuable information this morning. As you can hopefully tell by my tone, our tone, we really do think this is the kind of positive light we needed to get us kind of through the home stretch here. And with that, we wish you all a very happy new year, a very happy 2021, a very positive 2021. And you'll be hearing from us very soon with more information. I can guarantee you that. So have a great day, everybody, and a great weekend.